Hey there, folks. Greg Shepard here, S&A Financial Services. I specialize in helping folks just like yourself in higher education get the most out of that oftentimes confusing higher ed retirement plan. Okay, today's video, income options from TIAA Traditional. Okay, so we're going to clear up a few things, folks. This is pretty simple. Okay, I know everybody out there a lot more intelligent than myself. We can all figure this out. But there's been some I don't know, confusion, I guess I'll say, as to what these things mean. So let me just dive into this. Hopefully I won't take up too much time, but again, let's simplify this process. Okay, it's very simple. So this is around TIAA Traditional. Okay, excuse me, single life annuity option. All right, as the name implies, single life annuity option. Once that single life is done, that money gone. Okay, no one's getting money after you. You could live 6 days, 6 weeks, 6 years beyond. Once you start that single life annuity option, doesn't matter. When you're done, those payments are done. That's going to maximize the monthly payments. By the way, single life annuity option is going to pay you the most. Okay, because they don't have to pay anybody else, right? So that leads us to the next one, joint life annuity option. As the name implies, it's typically a spouse. You're naming a joint annuity option. So if you predecease that other person, typically a spouse, that spouse will receive payments upon their lifetime. Now, I'm going to get to a caveat here. I'm going to make sure I read this. So what I've seen in the past is if you name a beneficiary, it's not a spouse, he or she is less than 10 years. Yeah, less than 10 years your age, okay? Annuity options, you can't, let me make sure I get this right. Yeah, not available. So you can't, yeah, annuity for 2 lives is not available if that person is 10 years younger than you. Common sense, because if you're 60 years old and you name a 15-year-old grandson and granddaughter, they don't want to pay that person. If you die in six weeks, pay that person the rest of their life. That's not a very good business model for TIAA. Okay, so just keep that in mind. That's going to knock your payments down, by the way, your joint life annuity option from the single life annuity option. Okay, now this is where the confusion might come into play. 10, 15, 20 years, so beneficiary protection. What we're getting at here is that 10, 15, 20-year guarantee option. What we're stating is that you're naming a beneficiary. Make it simple here. Typically, you got a spouse, let's say they have one child, okay? They're going to name that child as the beneficiary option for 10 years, okay? That means if once you start those payments, okay, let's say you and your spouse die 8 years into that payment process, that child's going to get payments for 2 years. That's the 10 years. If you and your spouse live beyond that 10 years, child gets nothing. Okay, let's keep that in mind. Now, let me give you an example here. Now, some assumptions we have to take into consideration. $200,000 balance here, $200,350 to be exact. 4% settlement interest rate. This is primarily only for illustration purposes, okay, just to give you an idea of payments we're looking at. This by no means applies to you. This is not investment advice. Please contact myself or TIAA to make sure what you're going through is acceptable, the option you choose. So with that variables, single life annuity option is going to pay you $1,186. If you add a beneficiary, a 20-year period knocks it down to a little over $1,000. Okay, so it's a single life annuity, typically a single person that they want to put a younger person as a beneficiary. 20-year period knocks it down to $1,066. So joint life, okay, we're looking at $1,019. So we went from single life of $1,186 down to a joint life $1,019. If you and your partner add a beneficiary, a 10-year period, it's going to knock it down $1, okay, $1,018. 20-year period, same scenario, looking at $1,000. So that $1,019 joint life annuity option with you and your partner went down to $1,000 for that 20-year period. I know it's fast, but I'm trying to, for the sake of time here. Really, where the hiccups was that 10, 15, 20-year guarantee period. Okay, a lot of folks thought that if you name your spouse, like he or she is only good. That's only good for like 10, 15, or 20 years. That's not the case. The joint life annuity option is good for the two of you. Once you pass, depending upon the time frame you chose, typically your child would get some money depending upon, again, that time frame. Just trying to clear up some things. If you have some questions on your situation, especially around the TIA stuff, by all means, contact me. Information should be down below. All right, folks, Greg Shepard here, S&A Financial Services. Hey, go out and have a good one. All right, take care, folks. Bye-bye.